We're back. My name is Natasha Lorde, your favorite tax specialist. And in today's video, we're going to be talking about the things that you need to submit in your personal tax return, because let's be honest, a lot of us don't really know what to do, right? So I'm here to break it down for you. If you're doing your tax return this tax season, which is opening on the 7th of July at 8 p.m., this is what you've got to submit. If you have any rental properties, whether you made a profit or a loss, you need to submit information on that. How exactly should you do that? That is going to be in the form of a rental schedule. You can find examples online, or you can head over to our website. We do have a template that you can get hold of that you need to submit to support the fact that you made rental income, and whether it was a rental profit or a net profit or a net loss, that'll be revealed in that. Another thing that you need to submit on your personal tax return this tax season is if you disposed of a property. So did you make a capital gain? Was it a capital loss? It's very important to ensure that that is submitted accurately with all of the supporting information. When you're submitting things in a capital nature, you're able to include expenses that you incurred to increase the value of the property that you've disposed of. This helps you reduce the capital gain that is taxable, and also if it puts you into capital loss, it helps you have a capital loss that you can roll forward. This capital loss does not reduce your overall tax return. It's another conversation in and of itself, but it does not reduce your overall tax return. What it does do is that it reduces the taxable income for your next potential capital gain or loss. So if you sell a property, you bought it for 8,000 Rand, you sell it for 7,500, you've made a capital loss of 500 Rand, you cannot then take that 500 Rand as a credit and reduce your overall taxable income by that. But what you can do is if you buy another house and you then sell it, instead of buying it for 8,000 Rand, you sell it for 8,500 Rand, you can then net off the 500 Rand loss from the previous loss into this previous gain. So essentially what it is, in a technical sense, it's ring fenced to all things in capital in nature. But speak to a tax practitioner so you know exactly which items and amounts you can deduct, things like your architectural fees, your engineering fees, if you've increased the value of your property, if you've added another room, and there is a differentiation between renovation and repair. So let's recap. We've got two things that you want to make sure that you include in your tax return. And the first thing is going to be your rental income or rental loss. And another thing is that if you're going to be disposing, or if you have disposed of a property within the past financial year and it is now your time to shine with your tax season, please make sure that these property items are included in your tax return.